Colleagues, it's Tusanam PM Sebata. I'm doing a video on what I do on weekly basis. On the weekend, I do my weekly analysis, but I've never shared this weekly analysis. And yeah, this is the time I thought best to share it. And currently, we don't have much activity, but you'll get the principle of what I do on a weekly. I've seen lots of weekly analysis on YouTube, but I haven't seen somebody who's approaching it closer to my approach. My approach comes from, it's mainly influenced by Dr. Ravi's analysis and what he wrote in his books. Since the eagle left for the other side, I haven't seen weekly analysis which really touch me that much. That's why I'm sharing mine. And yeah, the way I observe the market is I'm more of a, I know it's not a popular thing in the markets, but I like picking bottoms and tops, then trade those. That's my approach. I want to get the comfort that this is a topping zone or a bottoming zone. Then I will start seeing if I can action something. Like if I came to this side, if you follow my crosshairs, you'll see that at this doji there, these lots of these lines were grouped at the bottom. So was RSI, so was stochastic. So this would have given me the comfort that this is a bottom zone. Now I would look for divergence, and yeah, the market from that low went down. What did RSI do? RSI went up. That's divergence. So I expected some little bounce there, and the bounce came. But it was blocked by Kijinsen, flat line there. But yeah, that's what I want. I want to get the comfort of where is the bottom or where are we hitting the top. Once I understand that this is a topping zone or a bottoming zone, then I start looking at those shares in those areas, and that's where I make my decisions. That's my approach. So how do I establish the shares which are making bottoms? I run a scan. This is on Think or Swim, but most of my best analysis is done on Metastock. But yeah, this will suffice for the guys on this part. And let me just share this a bit. This is the scan I run. As you can see, I called it stock RSI down. So it means that the stock RSIs of several time frames are grouped at the bottom. The time frames, I'm not very creative about them. I just took the Fibonacci numbers. There you go. 13, 21, 34, 55, 89, 144. That's all I went with. And I ran my stack. And I'm that type of guy. I don't want to trade small things. I execute all my trades and investments using options. Hence, I want big companies with options. That's why you see my minimum there for my companies is 20 billion. Anything below 20 billion, I'm not looking at it. The overall market which I got was 1,300. And of those, when I ran the scan, as you can see it here, I'll just close this part. When I ran the scan, I came up with 31 shares. And once I come up with these shares, I do an overview of which sectors are in these shares. And is it consistent for those sectors, or it's almost every sector? But currently, it's not all that well spread. It's predominantly the pharmacy companies to do with pharmacy. You have J&G, Roche, Netflix is an exception, Mac, Nova, SAP is an exception, but I dealt with SAP. I took a short position, and since it's now grouping on a daily, it's time to hedge my position. Not close it, hedge it, just in case it gets to bounce up and I don't lose anything there. China Mobile, yeah, but Snoff, GlaxoSmith, Gilead Science, Edwards Life Sciences, Kimberly Clark. You can see that there is lots of pharmacy in this sector. Then what I did is I said, okay, if these are mostly pharmacy stocks, I want to see the second part. Which of them is the strongest for me to execute a buy? How do I measure strongest? when I'm having this population of 31, I go and look in this predominant sector, which is companies to do with pharmacy. I look at in that predominant sector, I want to establish which one is having multiple time frames agreeing with the grouping at the bottom. That is, on this scan, when I was running this scan, I ran the daily time frame. And all these 31 are saying they are grouped at the bottom for the daily time frame. Then if I analyze these stocks, I'll try to establish which one has also grouped at the bottom for the weekly charts, the monthly charts. That will give me a higher probability of that point being a turning point. So let's go to Gilead. I already opened it. There we are. Let's start where we should start. On the weekly chart, on the daily chart, sorry. There we are. We are grouped there. You can see all these ones are nicely all grouped at the bottom there. And the price has bounced in the same zone in the last 2 days. Where is RSI is way down here, printing a 20.6. And at the same zone, stochastic is doing a 14, so it's seriously oversold. And with this grouping, I believe this is a good buy zone. This is the daily. I go and check what's happening with the weekly. I come to the weekly, they just all grouped there. What is RSI doing? It's printing a 23. Stochastic is down at 4. So even on the weekly chart, this is seriously oversold. Then lastly, I go to check if the monthly is also agreeing with the daily and the weekly. There we are. The monthly is also grouped at the bottom. RSI is printing 34. Stochastic is at 12. Also, slightly oversold, but just borderline there. But what I'm happy with is my stock RSIs. For the monthly, weekly, and daily, they're all grouped. This is a good position to start hitting a buy. Most companies in that scan, I wouldn't recommend a buy. I would recommend somebody hedging. In its simplest form, you could use a credit callback spread ratio. Credit, I'm insisting on credit so that you don't pay to hedge it. And if it goes against you, you are going to get back that credit, which if you do it right, you should scoop yourself about 2 to 3% there. So if you are wrong, you get paid that. If you are right, you will hedge your position. If the stock starts bouncing up, you won't lose any, or you can even make some money when it bounces net. So that's what I would recommend for most of the shares. And that goes for SAP, which I've done a video on my YouTube and posted it also on Twitter. But yeah, for most of these stocks which are here, my market overview for this coming week, whatever you've made, if you are on the bearish side, hedge your gains. If you want to take a position, the position I would highly go with is Gilead Sciences. But you can look at some of these. If you find a stock with triple market confirmations of the daily, weekly, and monthly, that will be the best. Just to illustrate this point, I'll just go and open Netflix and show you what's happening with Netflix. On the monthly chart, there is Netflix, all threaded around there at the very top there, the very top. So on the monthly basis, Netflix is saying it's about to drop. On the weekly part, Netflix is way in the middle. way in the middle, not telling us anything, but the trend is downwards. On the daily chart, daily all grouped at the bottom as per my scan. Would I short Netflix? No. Would I buy Netflix? No. What I would predominantly do if I was short Netflix from this zone here, then I'll be hedging here. Selling a call in the money and buying, say, 2 puts just out of the money somewhere here to hedge my down position. Sorry, selling a call in the money and buying 2 calls just slightly out of the money to put a credit back spread ratio. That's what I would do for this one. This was just an illustration of what I would do if I was already in a position. But for this analysis, I'm just trying to focus on Gilead Science as one which I would have picked if I wanted to go long and traded that one. And this would be a stock which I'll be looking at trading and staying in it for, say, 6 months to a year. Therefore, what I'll do next, yes, I'll take a position when this market opens. How do I take a position? I'll most likely look at where it opens. If it gaps down on the open, I'm buying a call at the money and selling a credit spread out of the money, a call credit spread out of the money to finance part of that call which I bought. And yes, that's how I would put it. And that call spread which I would sell will be of a different month from the call which I would have bought. The call will be likely 3 months to 5 months, which I'm buying, and the credit spread which I will use will be a different period. But net, I'll try and put there. I've done a video on this, which I call the 5-bagger. If you want to see my option setup, you can look at it there. But the next thing which I would also do for this position is I would look at the analysis of Gilead Science from what others have done, going to Google Finance, Yahoo Finance, and do my own intrinsic valuation, because my intention will be to hold this thing for a long period. These are the type of shares which I like to get into, where the daily, weekly, and monthly are in agreement. That's the type of share which I can easily hold for more than a year and make some serious money using my leveraging. Yeah, and also save some taxes there. But definitely from here on, I'm going to do my intrinsic valuation and read more on this one. But come Monday morning, when this opens, I'll see how it goes. Because what I've observed in most cases when buying at the bottoms, you see these tweaks there at the bottom there? Try to get at the bottom of these tweaks. And I expect the market, when it opens or during the day, is going to come and touch these bottoms of... let's just see what was the bottom there. Low was 57.18. So I expect it to come and touch around 57.10, somewhere there. That's where I would ideally want to execute. But yeah, that's my analysis. What I'm left with doing here for Gilead now is to do my intrinsic valuation, read more on the news to do with Gilead, what's happening. But I'm very interested from a technical perspective. I'm very interested in getting into this share. The other point which I also do, I'll just show you off here. I want to see the relative strength. SPX, it's been going down for a long time. Let me get back to where I was first. I forgot to explain one of the parts which I also do to establish which chart do I trade off. As you can see here, this is the daily. There is definitely, the market is going down price-wise. RSI is also going down, no divergence here. I like to trade a chart with divergence. On the weekly, the Previous bottom was there and we went down. This one, we went down. Do we have divergence? Nope, no divergence. Not even reverse divergence. Interesting. On the monthly chart, the last bottom was, significant bottom was there. And what happened? The price has since gone lower. But RSI has refused to confirm that. This is divergence. So the likely chart to be traded here is the monthly chart. But I'm very cautious about trading the monthly chart. I usually prefer to go with the weekly. But the appropriate chart to trade in this scenario would be the monthly chart. And looking at this divergence here, the top of this divergence is sitting somewhere at that level of 84, 85 there. The real peak is there at 90. And now we are trading at around 58. I expect this to bounce and come and touch that 90 zone or somewhere there. That's my take, but yeah, that's the appropriate chart to trade, but I'm likely going to trade the weekly one. And going back now to relative strength. First, I compare the relative strength with the S&PX or S&PY 500 is the same for me. When the market is going up like it was there, Gilead was outperforming the S&P 500. When it was going down, it underperformed big time. And now we are at a crucial turning point. What do I expect? I expect Gilead to outperform. But this is clearer when I do my analysis on Metastock. Because on Metastock, I can put indicators like these groupings on the relative strength chart and know whether it's also at the bottom, about to turn upwards, and I have a better understanding of relative strength analysis. But if you can give me some liberty on the relative strength analysis in Metastock, this is also at the very bottom, giving us an indication that it's about to change trend. So I'm likely to get a big shift move. And as you can see, I was projecting the tops to be around 90 there. That's where I expect this to bounce back to. That's an expectation, but I'll always use chart analysis to see whether we've hit the top. And yeah, I think I've covered most of the stuff there, except for implied volatility. I use implied volatility to establish how do I set up my options. As I said, relatively, the implied volatility is low. It's within its normal, so I'm comfortable with buying an option at the money and selling a credit spread out of the money to finance part of that, because the actual which I'll be buying won't be that expensive. But if I was buying puts here, I'll be a little bit of a different view. Like when it was at the top there, the implied volatility, this is where I would be selling puts, not buying. But when it's implied volatility is this low, I can start buying to get into my position. But yeah, this one is just because I use options for trading, nothing much. Back to my standard. That's my weekly analysis. That's how I would take my analysis for the weekly. First, I would run the scans. I have several of them. The ones for at the bottom, see, stock market D bottom, stock market D top, RSI top, RSI bottom, stock RSI bottom and top. Once I establish that we are in now a topping zone or a bottoming zone, then I go and look at the actual shares which came up from the scan, which sectors are there. If there is a predominant sector, I go into that sector, I look at what's in this sector, what am I likely to buy in that sector. And yeah, after that, I do an analysis, relative strength to the sector, relative strength to SPX, then the sector, I see how that share is likely to perform. And I also do a share by share analysis of seeing how it's likely to do and how it will compare with the other ones. And like on this one, I ran a relative strength for AMGN. Let me get it right. What's going on now? I want to load. It's the same relative strength analysis similar to what I do for S&PX, but this time I want to compare it with the AMGN. Why is it not coming up? AMGN. Apply. Okay. You can see it's been underperforming AMG for the longest time, for years, but now we expect that to turn. That's an analysis I do well on Metastock. I'm not going to spend more time on it, but you need to do this relative strength to make sure that the stock which you are getting involved in is the one with the best relative strength. It's going to give you the best returns. That's what I did here for Gilead Science. And yeah, I'm done. That's my weekly analysis. First, I look for stocks in the topping zone or bottoming zone. I look at those sectors to figure out which one is which sector is predominant. I go into that sector, find a stock which I would love, look at the relative strengths about it, and once I'm happy with the stock, I look at the implied volatility to understand how to structure my option positions. Then I'm happy. I also check which chart is the appropriate one to trade. If it's a daily, I'll have my time frames of setting my option with the smaller times. If it's more of a weekly chart, I'm going for 3 months to 4 months. If it's an annual chart like what Gilead is showing, I'm supposed to go with, say, 6 months to 9 months type of option setups. That's me, guys. That's my weekly analysis. This is the only weekly analysis I've shared, and I don't promise to keep sharing it. It was just a once off. I thank you. It's Tusanang PM Sebata.